Well, good afternoon, everyone. Hey, it's Shooter. And just a couple things I wanted to go over. I was trying to save this for major markets this weekend, but I think I need to bring it to your attention sooner. So let me jump right into it. Of course, at the end of this presentation, please do review our disclosures. So when markets start to roll over, we get some signs. And today, we crossed a significant marker, which basically was our VWAP off of this lows where really we had our last good bounce. So our next low would be around 504.74 from here, and then really back testing the January lows around 498.94. Now, I find the VWAPs to be very accurate, but one other thing that I've always looked at is the 200, 250-day bands, because they tend to give you this rolling scenario. And notice how breadth is expanding. You get a retrace, you can clearly see it. Then it extends, you can clearly see it. You can see it when it starts rolling over. So on your first band, you start rolling over. We've just started to roll over on our first band up here using that. You just try and broaden this out a little bit so we can see that. Let me go back to my HCL bars here. So not so much of my screen takes up candles. So we've just started to roll over here. So let's talk about just the outcomes as far as counts. So right now, we're in a minor wave 4, or minor wave 4, yes. So, we have a couple of outcomes. Let me just try and get a visual of this particular leg, what it's telling me it is. So right now it's telling me an ABC. So we have two targets already that catch my attention. So we have at 509.80. Roscoe, that's enough, buddy. I'm trying to do a video. He was mad I went out to the park and didn't take it. He's the boss. So now we have 509.80 and 507.85, at least from this look. So now if we come in, and this is what I always look at, overlays, Bollinger Bands with fibs, all right? Because then it's going to give me what our standard is. Now, what I don't like here is that this still is holding up, and this is clearly heading down. I'm trying to see where we have that much breadth to the upside now. So in short, we haven't had that much breadth in recent times on the S&P when it comes to standard deviations, tagged third standard deviation. In other words, the depth of this candle down and then the retrace back up, whether or not we have an outlier, because I'm just going to look at this as a curve, right? Curve over time. So, and it's, so that curve puts us to which we've already exceeded, right? Just so the Bollinger Band should head in that direction. And, then we should head, maybe something to this degree, I would think. Just trying to measure this little big thing here. It really depends on how deep we go here. That slope is. And that's going to put us in, a little lower bound down towards 502, which obviously the first AVWAP was showing that 504 range anyways. So, I would say that somewhere between that 509 and that 504 is pretty much a given. So 504 is basically going to be the 230 day down there. So that's what I'm seeing as far as that goes. So let me jump over and go just do a quick market recap. Dollar broke out, sort of gave the heads up in the room. Right now it's only measuring 105. This keeps going. That's going to turn the heat up. Just going to turn the heat up in the markets. Now, the good thing is if it ends at 105, we should be pretty much done with, that is actually a great indicator to know when we're going to turn at this point. So just looking at my regular S&P chart, right now I'm getting that 509.94. I don't know, we really don't have support down here till 479. That's a problem. I don't look at any of this as support because it's all uptrend. This is support. Even though, that's support. But we can slice right through that. I just don't see that holding up. And, I was chasing Nvidia a little bit to the short side this morning. And, I just started watching the Magnificent Seven because I was trying to get a view on whether or not they were going to get top heavy. When our generals get in trouble, the rest of the market follows. So that's sort of my mindset here. And, we haven't really got a lot of noise right here in the Qs. Now, this is saying it's going into a leading diagonal as I'm looking at it now. So it is saying that we're going to get down to 415.97. Let me put the correct label up there. So when I look at this again, it's right. Now that's going to be an intermediate way. So I'm going to just leave this this is a target 2 green. So just giving you a visual here. So we've got some serious downside. So your markers are, you sort of got this cliff here, and our gap, is that in line with our gap? Forgive me, one thing that I got with this today is my vision's blurred. I don't know what the hell happened. Can't see the damn screen. I haven't got to the optometrist yet. So we got like this ledge here at 431.27. I can see with my bifocals. Mama never told me. All right, so that I would say is our line in our sand, but I'd be chasing it short off of this. So 432.74, I'd have something short. Clearly have a hedge on, if you're long here. So let's talk. The hedge. Yeah, it really depends on your position sizes and what your mix is, and whether or not you're not taking any heat already. I would clearly be trimming here, or I clearly would be selling some covered calls in QQQ here right now, because there's just too much of a chance that it rolls to the down. Just sell the monthlies. That would be my thought. All right, let's jump over and look at IWM. What did I just nail that top? 211.88, huh? Except it's a little off. I was asking for 213.45, 15 or whatever. I was close. Still, $2 is close enough for government work. I love saying that, by the way. I don't know why. I do. So let's see if we can see where this thing's going to go. Larger picture, ABC. I don't ever like the distorted counts the app gives us. It's just giving you the base scenario because it doesn't have it. But right now, that's the viable thing. So let's just get this in line with corrective legs they are about 50% of the original slope. So if we're going to do that, we're going to do it pretty quick. Double that out. June 7th, we should be done to the downside for that leg 1. And then whether or not we recover there and this becomes something else, I don't, ABC patterns, the challenging part, failed, or it hasn't broken out, just doesn't have enough muster to get in either direction. All right, so our original primary wave set came in at 392.79, and we talked about selling 400 covered calls on the Dow, and we haven't talked about that in a while in major markets. So let me update this count since we haven't really talked about it in a while. It's still seeing it. So what it's seeing is 352.08, which is another leading diagonal. I always hate those. But we're early here. I'm going to come in. I'm going to flag it with the Dow, just like I flagged it on the S&P. Where's our shelf? Well, our shelf really is way back over here. This is sort of where we went up. So breakdown here, that's really where your shelf is. But I would be short up here off of this breakdown. Now let me give another label. Sorry, this is longer than I already wanted it to be. Hey. All right, so 380.48. I definitely, that would be where I'd put some shorts on. I wouldn't chase the 350 puts. Let me clarify this. Everything depends on your risk threshold, okay? If you've had a really good year and you're up 400% for the year, right? You can afford to take 1%, right? And in a market that is trending, and we know that this is a huge uptrend, right? All right. And our fib extensions, we can take, you want to look at all your tools or ask me to look at them, or we'll do a video call or whatever. I'm not going to do 10 a week, but if you guys want me to look, I really don't have a problem looking. All right. So take a regular fib extension tool from your low or your run, 323.21 up to your high. And, a shallow retrace, right, is a 382. Right? We're always looking for at least the 61.8, but I go one line above them because it increases my margin of safety. That's what I do. So looking at this whole scenario, risk reward to the downside on this trade is high. So those are the trades that we want to take, just like the trade I took in coin. I'm looking at the numbers there. We just came off of a nice flush. Bitcoin was doing a nice basing pattern, which it's done before it's taken off again. I'm like, I can probably get $4, $5 out of it guaranteed. Plus I have $11 more to the upside potentially if Bitcoin runs. That's the kind of risk reward I like. So when you set up a trade, when I say a target of 350, you can do like 375, 370, 365, and maybe even a few 350. Scatter it out. Use that same concept of how Fibonacci's extend. Because when you have a high conviction trade to the downside, honestly, that is where you bank. That is 70% of my money. Bank on those trades. I'm not going to say you need to go large. That's not what I'm saying. Risk management still applies, but that's when you need to consider scaling out in your strikes so you can get a decent position on and then benefit from that, especially if you're also using this as a hedge because you're going to ride out the heat on the everything else that's there. So, all right, let's look at TLT now. What do we break below? Question is it done with that 89? So that really, it's kind of a weak wedge too. The question is it going to be done at 80? I hate to say this about inflation, but the heat's in the kitchen. I don't know if the Fed's going to get it out right now. And they're going to freak out if we have too many more hot days in the kitchen. And they're not going to tell anybody. And they're going to come in and they're going to hike 0.25%. And we're down 5%. And that's the spook that I have in the market. That's what I have for today, folks. I'll end with that. Great trading. Until next time.